Looking at this breakdown or analysis from the higher time frame, um, this is a daily chart. This is a daily chart. We're up in a daily fair value gap right now. What day is this? All right, so this was last Monday. Last Monday, we created the highest high inside of that fair value gap. And since last Monday, it's just been hanging around in this gap. So it's showing resistance. It went above it. Then the next candle, Tuesday, closed below the opening price of the candlestick that created the high in that fair value gap that it could not get above. So the fact that price haven't made it above this high is showing this gap as valid as a means of it could be resistance right now. It can be a PD array, an area that we will expect price to have a certain reaction to. Either it will blow through it, come back down, retest, and continue up, or it will act as, at that point, it'll be support. It'll be resistance turn support. Right now, it's acting as resistance. So seeing this large engulfing candle to the downside as evidence that it wants to, there's resistance in this area. And then the fact that all week, all last week, and majority of this week, price has been under the 50% point of it. Wicks have came above it, but there was strong resistance at the 50% level. So seeing that the bodies continue to close and stay under this 50% area, that's more evidence that this is an area of weakness. So with this being on a higher time frame, that's giving me a bearish, not bearish, my bad, a bias for bearishness for the long term. So seeing this here, we have a break of structure, which it is a break, but it's not a strong one that I would like. Like, I would prefer to see this body close under this low. But seeing that we have a strong down close candle under the low is still better than a body closing above this 50% area. So, oops. So we have a little small break of structure here. So now I'm gonna go ahead and drop down to the smaller time frame. Actually, I'm gonna get a target first. Let me get rid of all this stuff. We're doing a lot of analyzing on this market. So for a long-term play, I would expect price to come all the way down to here. I wouldn't expect that today. It's a lot of movement for one day, but over the course of a couple of weeks, maybe by the end of next week, price could be in this area. If we were to continue bullish, price could come down here. This could be a small retracement from this run up. It can come down here, have a little reaction. It's going to act as support, and then price can continue up later on. But we're not going to worry about that right now. Right now, we're just focused on what we have going on for the day. So I just use a higher time frame to get a little more information on my bias for the day. So let me drop down to the hour. See if we having more confluence going on in here. So this right here was yesterday's PM session. We made this low, and this is Tuesday's PM session. We made this high. So we're right in the 50% area of this high and this low. Yeah. So we're right at the 50% area, but we're in a premium. So being on the premium side, it's okay to short from the premium side. Have we been up under the 50%? That's a discount. And being in a discount, you would expect price to continue to run up to a premium. So I wouldn't be comfortable looking for sales if price was under the 50% area. So seeing anywhere above it, it's below market price open, that's a little more confluence that I can that my buyers will be bearish for the day. So we have a little small order block here that I would take note of to see how price reacts to it. I would expect this to act as a means of resistance. Just 1 hour. So I wouldn't take a trade off of this just because price tap it. I would just use it as a confluence, see how price react to it. If it reacts a certain way, it'll give me confirmation or confidence to go ahead and take the trade as long as it's aligned with my bias. So within this order block, we have a fair value gap. It's even more confluence. So we'll go ahead and take note of that also. I normally don't mark all of this stuff up. I'll just take a mental note of it because it can clutter the chart. When you have too much stuff on the chart, as you've seen before, it can hide price action or block it. All right. Just for the purpose of this video. No, that's too much. $15 fair value gap. And also, we have even more reason for price to come up here. We have relative equal highs up here, and this is the yesterday's New York AM session. So with there being buy side liquidity up here, fair value gap inside of our order block, I would expect price to go ahead and run up here because I'm expecting lower prices. So this leg up here will be the manipulation move to trick people into longs and to knock these people out of their trades short, because there's people that got in this move from yesterday and they've been in this move and they have their stop losses up here. So so the algorithm will come up here to seek their buy stops to knock them out of the trades to continue down. So if my bias is correct and this was to happen, I would like to see just a wick come above here. I don't want to see a body close anywhere up here. If I see a body close up here, then this order block, this fair value gap, all that is invalid. My bias is offsides. So at that point, I will just sit on my hands, wait for price to give me something else. So let's see here. All right, so we just took out buy side above the London session. We're in the 850 to 910 macro right now. And that's usually when price sets up what it wants to do for the next window of opportunity. Let's go ahead and mark that up real quick. Oops. And the window of opportunity for me, first window is from 9:30 to 10 o'clock. Second window of opportunity is from 10 o'clock to 11 o'clock. So let's see what we got going on here. This is what I mean by having too much on the chart and have your chart cluttered. This is the chart that I backtest on and analyze on, so I got a whole lot not put on it. So I got the most recent high marked up here as buy side liquidity, and then the most recent lowest low marked up here, which is the London session, and that's also right by the true opening day, which is at midnight, and that's the opening price for Thursday. We have a little baby February gap right here, and we can expect a reaction off of. Either to act as support or resistance, but being bearish for the day, I would like to see price blow down under this and come back up and retest it. So I'm gonna go ahead and mark this up just to see if we get some sort of reaction off of it. Let's get rid of this. Also, another thing that gives me bearish confluence is if I'm expecting, where did it go? Using the open high low close concept, or have an understanding of the open high low close of each candlestick. When I'm expecting bearishness and I understand that the first opening price is going to be the manipulation move based off of the accumulation, manipulation, and distribution concept. If I'm expecting lower prices, then I would expect price to open low or open wherever it opens at, and then create the high. So it'll be the open high, and then you can expect the low, and then they can retrace a little bit to give you the close. So seeing price run up right after the opening, that's aligning with the potential that this candlestick can be bearish. Also, the fact that we open down here, I wish I didn't have all this stuff in my chart. Yeah, can't show you. But the fact that we opened down here, there was a gap right here when this opened. From this low to this opening, that was a gap. So the fact that price opened, filled in that gap, that's something ICT calls an immediate rebalance. So it's getting that inefficiency cleared up and balanced, like getting that business out the way ASAP, so we can go ahead and continue down and do what it do. So for today, my target would actually be here for the day. Price can go a lot lower and clear out these lows, but I will be all the way content with this low right here being taken out, because that's what price seeks. Price seeks liquidity that's inside external liquidity. No. Price seeks inefficiencies that's inside external liquidity, and then it also seeks external liquidity once the inefficiencies are filled up. So the fact that it filled this inefficiency early, now it's going to seek something on the other direction. And like I said, with me being bearish already, seeing this candle open low and then run up, create the high of the day, it's just more confluence of it's aligning with my buyers basically. Let me drop back down. Also, something else aligning with it Let me go to regular trading hours. This line here is yesterday's closing price. So this price closed, or we're opening a lot higher than where we closed yesterday. This price is at 22.59. We're getting ready to open somewhere 390. So seeing that we're way above that area, once price open, I'll toggle this again and show you that gap. Say that there is a 70% likelihood that that gap will get filled in at least by 50%. So that's giving me an early morning bias. So the fact that I'm having all these things align up, looking pointing to lower prices, my bias for the day is definitely bearish. If there's something that's set up bullish and I miss it because my bias is bearish, it is what it is. For this 930, this 930 setup, that's all I'm looking for is bearish moves. I will be completely content with missing it if it do continue to run up, because if I turn around and try to chase that and then it ends up turning around on me and going bearish, that's when psychological damage has been done. So I'm gonna go ahead and just sit on my hands at this point, wait for the manipulation move, which is what I would expect here, and then wait for my setup to take place. I like to see a displacement to the downside since I'm bearish for the day. I like to see a displacement, a low broken with the body of the candlestick closing below that low and leaving a fair value gap, and I'll enter 50% of that fair value gap and run that to the downside. If this give me that setup to the downside after breaking the low with the fair value gap, I'll go ahead and enter and catch a short one and catch a small trade to the downside, because the fact that we got this wick here, this right here could have been the early morning form of manipulation. We're already well above the opening price and we're well above the closing price of yesterday. So this right here could be the accumulation. And this right here could have been the manipulation leg. And now we could be in a distribution phase. So I would just have to sit and wait. This is literally that if this, then that method. So we have a break under here. We have a fair value gap. Took up this low, but it tapped down to this fair value gap, and it's before 930. I wouldn't trust that fair value gap because we're inside of this one. I wouldn't trust that fair value gap right now. So I'm gonna just watch it, see what happens at the 930 opening price. So this right here can act as support, and they can completely blow through this and disrespect this and come up here and grab this buy side liquidity. So I wouldn't trust this as a short, not just yet. Look at the reaction off of this fair value gap. Look at the previous reaction off of this fair value gap. So I definitely wouldn't trust this one right now. I wouldn't have put me in either. Anyways, my entry would have been at the 50% of that. Took out this low. Now, if this thing continues lower, I would want this candlestick to close under this low and leave a fair value gap. That's the one I would enter on for short. All right, so I'm gonna enter 50%. Stop loss above the high that left the fair value gap. Be a 3-to-1. Tap the sell side liquidity up under London. So that's external liquidity. Now this is inefficiency in between the two external liquidities. The two external is the buy side liquidity and the sell side liquidity. We're at a discount now between these two ranges. So now I would expect to run up into an inefficiency so it can continue back down. Oh, that was an accident. We like having a whole lot on the chart. Look how this 1 minute fair value gap aligns with this new fair value gap. It's a little more influence and confirmation. And this low, okay, this is the sell side liquidity. So it can be coming up to retest that also. So I would like to see a body close under this, but the wick come up and tap this. Needed that wick to go a little bit higher. It did what I predicted, but not enough. I would like for this one to come up and do that. All right, we are tapped in. It can come all the way up to this area to completely fill the gap in, or its business can be done because it grabbed the liquidity above this candle here. It just barely tapped above it, and then it did its business. Now this right here would be something that would be considered a bullish order block. For this to continue down, I would like for it to close or to just blow through this and not act as support right there. You see how it slowed down a little bit right here? So I would like to see it just blow through that. I should blow through that, clear out these lows, and then continue down to close in. Oh yeah, I was gonna show you guys that gap, the opening gap I was talking about. This is where price closed yesterday, and this is where we opened. So all of this is considered an inefficiency that needs to be filled in. It don't have to be 100%, but 70% of the time it'll fill in 50% of that. But the fact that I have higher targets lower, I would expect for that whole thing to be filled in. And this thing right here is acting as support. Let's see if it grabbed the liquidity above this candlestick, possibly fill this in. And this is considered an order block also. So it can come up and tap this, filling in this fair value gap, and then go ahead and run down. I'd like to see this thing right here completely violated though. I'd like to see this turn support from support to resistance. So price will come down, come back up to it, tap it, and then that'll give it its jet fuel to continue to run down. I like that we got nothing but wicks. Let me get this out the way. I like how we got nothing but wicks hanging out in the fair value gap. That's showing signs of resistance. And they're only at the 50% of it. Let me get these out the way so I can show you what that fair value gap looks like. It's hanging out at the 50% of it, which is showing resistance. Highest this can go for this fair value gap to be valid is the top of the candlestick that left the fair value gap. Now, if a body closed above here but barely wick above it, I wouldn't like that either. That's showing some upward pressure right there. But I still would trust this because this isn't invalid until price get above the high of this candlestick. Bodies are still closing outside of it, even if they close inside of it but under the 50%, that's still showing signs of resistance right here. But the fact that we got bodies not even wanting to close inside of it, that's showing that this is a decent resistance area. So now basically we're bouncing between support and resistance. This is acting as resistance and this is acting as support. So I need this to be broken in order for price to go ahead and continue bearish. So we're going to see which one of these is stronger at this point. Right now we're having a battle. There's buying and selling going on right here. So who's stronger? We got more sellers in the market or we have more buyers in the market right here? That's what's going to tell us the direction for the rest of this 9:30 to 10 o'clock session. It's not going to be the direction for the day, but it'll be the rest of the direction for this session at least. Which at the moment is the only session I'm paying attention to. If this trade don't play out, then I'll go ahead and wait for the second opportunity, which is between 10 and 11. This guy's trying to hold it. It's acting that support. I don't want to see a large displacement candle break under this low right here and leave a fair value gap. That's what I would expect to happen. See a fair value gap, and after the fair value gap, then we should go ahead and break this low. It's acting stubborn now. This right here is all accumulation. All this movement has been sideways. Just literally bouncing in between support and resistance. I want this to close under here, leaving the body closing under this candlestick. And the next candle, I would like to see it push down a little bit, close somewhere down here to leave this gap open. And that'll be a sign that it's finally ready to finally break out of here. Also, if it closes under here, it'll also be closing under this bullish order block. So it'll come back up, fill in that fair value gap, and also tap this, which is now will be resistance. So here's a fair value gap. I would like to remain open. Just broke under this low, grab this liquidity. So now it's going to come back up and fill in the inefficiency. The only thing this algorithm seek for is inefficiencies and liquidity. If you fill this in before closing, then that will be considered an immediate rebalance, and it'll also be tapping, retesting this order block here. So that's an immediate rebalance. Now, if this closed above this candle, that'll be considered a complete engulfing, and I would not like that. So I will bring my stop loss down to the high of this candlestick, because usually this is a sign of reversal, especially after grabbing liquidity. Sometimes they just seek liquidity for liquidity, so it could bring it all the way back up to here. So that's just a little insurance, basically. After being in so much profit, you want to protect your initial investment. That's one thing about the Nasdaq, is that it can move a lot in a short amount of time, and really do some damage in that amount of time. All right, there's my trade for the day. That was my trade. So now I would close the charts, go about my day. Like, exactly what I expected to happen pretty much happened. Let's see here. Had we not had the bias already, we thought that price could be bullish or bearish, and then we got caught up in the middle of this. It's easy to get caught in some buys and caught in sales at the same time, not knowing which way to expect the market to run. So having the bias, doing the pre-market analysis, that right there was a game changer for my trading, instead of hopping on the charts at New York 9:30 opening, and it's like, okay, which way is it gonna go? Like, no, that's a quick, easy way to get caught up in the manipulation later. So that pre-market analysis, I really feel is a game changer, and it's real important to being able to be consistently profitable in these markets and stay out the way of the fluff, basically. So, all right, I'm going to shut it down for the day and get ready for my work day.